Hi everybody, it's FIBO Group, and you are watching to the Market Watch Review. Asia-Pacific equities were generally lower following the losses in North America, Europe. Europe's Stoxx 600 has recovered its losses from last week, and U.S. index futures trade with a stronger bias. The U.S. dollar has started the week consolidating in narrow ranges after last week's activity, which saw it extend its recovery. While the Australian and New Zealand dollars are still soft, the Swiss franc is almost flat, and the Swiss franc remains weaker. The G10 currencies that lead by sterling are showing small gains. Near $1,811, gold is flat. The past 2 weeks have seen a decline of 3% in gold prices. The April WTI is flat at $76.30. In the last few weeks, it has fallen by 4.5%. Asian Pacific market. Yuta, the presumed close governor of Bank of Japan, spoke for the second time before the diet. He didn't add much to his previous week's remarks. He is willing to adjust monetary policies when inflation is sustainably above 2%. The dollar is consolidating its pre-weekend gains of JPY 136.50 to JPY 136.50. It is just half the yen range above JPY 136.00. The 2.2% decline in the Australian dollar that occurred last week has been extended. It began last week at $0.69 and has now fallen to $0.6700. Market of Europe. The economic outlook for Europe is now less certain as the market prices the outlook for Fed policy. Initial expectations were that fourth quarter German GDP would be flat. It was minus 0.2%. The preliminary February CPI is the data highlight of this week. The base effect will mean that the annual headline rate will drop to 8.2% from 8.6% due to the 0.5% monthly increase. After making a new low near $1.0530, the euro is now stabilizing in a narrow range. It is now at 1.0570. Although a breakthrough on the Northern Ireland Protocol may be announced soon, the prospects are not very encouraging. It is currently holding at $1.20. Market of America. Swaps markets moved closer to the 5.50% terminal Fed funds rates. The equity market still sees good economic news as a negative. Major U.S. indices fell at least 1 percentage point ahead of the weekend. Canada reports fourth quarter current account figures. It is expected to report a deficit similar to the third quarter deficit of 11 billion Canadian dollars. This would result in a deficit of 18 billion for the year. The report may have a marginal effect on the Canadian dollar, however. It consolidates last week's losses, which saw the greenback rise to CAD 1.3665. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.